Hi guys, welcome back to TipRanks. My name is Annika, and here at TipRanks we love to hear what you guys think of different stocks you're looking at and your opinions on the market sentiment. In this video, we're going to be looking at two e-commerce stocks that are poised to have growth in 2022. We're going to be looking at Wix.com and Shopify. And I just want to say thank you guys for watching this video. And if you are here, please hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. And also leave your thoughts in the comments below. We love to hear from you. It's great to get different perspectives on different stocks we look at. The pandemic has caused a lot of brick and mortar shops to move online. This is because a lot of the pandemic restrictions kept a lot of stores shut, so many of them shifted online and online sales were booming. But this change hasn't only been temporary. In fact, industry trends now show that consumers choose to shop online more than ever before. It seems like consumer habits have been changing. Even myself, I tend to shop online a lot more than I used to do before. I just find it easier. This has also meant that there has been a rise of the necessity of e-commerce infrastructure providers, such as Shopify and Wix. Shopify is a Canadian multinational e-commerce company that is headquartered in Ottawa in Ontario. It has its proprietary e-commerce platform that has many online shops as well as point-of-sales retail systems. The ticker for Shopify is SHOP. The current price for Shopify is $1,000.88. The analyst rating consensus is a moderate buy, and the analyst price target is $1,623.86. This is a whopping 49.25% upside based on 21 Wall Street analysts offering 12-month price targets for Shopify. Shares of Shopify have seen a pullback recently, as the stock has tanked around 14% in the past month and by 6.1% in the past year. Shopify is a provider of essential internet infrastructure for e-commerce that offers services through subscription and merchant solutions. They actually announced great third quarter financial results of 2021. Their total revenue in the third quarter was $1,123.7 million, and this was up 46% year over year. Their subscription solution revenue was $336.2 million. This was also up by 37% year over year, and this was primarily due to more merchants joining the platform. The merchant solutions revenue was $787.5 million. This was up 51% year over year, and this was driven primarily by the growth of the gross merchandise volume. They also had higher monthly recurring revenue as of September 30, 2021, and this was of $98.8 million. This had increased by 33% year over year. Gross profit had also increased by 50% to $608.9 million in the third quarter of 2021, compared to $405.1 million for the third quarter of 2020. The adjusted net income for the third quarter of 2021 was $102.8 million. This was around 81 cents per diluted share, compared to the adjusted net income of $140.8 million, which was around $1.13 per diluted share for the third quarter of 2020. In Q3, Shopify had some major developments. They launched Shopify Markets, which is a product that makes cross-border commerce easier for entrepreneurs. Shopify also began rolling out their Shopify Balance, which is a money management product for merchants in the United States. And not only that, but Shopify introduced TikTok shopping to merchants, enabling merchants with a TikTok for a business account to add products that link directly to their online store checkout. This is a great way of Shopify utilizing social media to ensure that their merchants can harness and gain sales. In recent news, Shopify and China's JD.com teamed up to capture cross-border sellers. This strategic partnership will allow global brands to tap into China's enormous demand for imported goods, and this will also help Chinese merchants sell overseas. Tapping into an emerging market is a huge opportunity for merchants that use Shopify. Shopify has also integrated Yoast SEO. This is so that they can optimize their products and posts to show inorganic non-shopping results. Yoast SEO is one of the most commonly used SEO apps in the WordPress ecosystem, and the launch of this app for Shopify is a testament to the success and the rapid growth for e-commerce in the last few years. In addition to this, the number of Shopify stores have grown by 200% ever since the outbreak of the pandemic. E-commerce has grown significantly, and this increase of shops of 200% is a testament to that. So it was between March 2020 and January 2022 that the number of stores on Shopify grew by 201.53%. This was around 2.5 million new stores. Ecommerce Group has become a Shopify partner. Ecommerce is Southeast Asia's leading end-to-end e-commerce platform and solutions provider, and they announced that they have become the first Shopify Plus partner in Indonesia, Thailand, and the Philippines. This would essentially serve brands across all of Southeast Asia, and this would provide them with a reliable, flexible, and quick launch and scaling of e-commerce businesses that help them go directly to the consumer with their own sales channel faster than any other enterprise platform. Taking a look at the website traffic chart on TipRanks, the green line represents the website traffic on Shopify, and the gray line represents the year-over-year traffic. This tool indicates that in the month of December alone, Shopify's unique visitors across all of its domains jumped by 53.6% year over year to 48.6 million. In Q4, Shopify's unique visitors across all of the domains have increased year over year by 38.5% to 134.4 million. William Blair analyst Matthew Pfau deems it to be a buy, and he says that the current pullback in the stock's price has brought Shopify's stock valuation to a more reasonable level. He believes that the company's premium valuation is justified, given its growth prospects, great execution, and dominance in the e-commerce software space. He says that Shopify continues to provide the best e-commerce platform to small, medium businesses, and in our view, the company has shown good progress with its Plus solution. Shopify's Plus e-commerce solution lets larger merchants scale up easily, provides support, and offers additional functionality to its platform. When it comes to Q4, he said that the Street's estimates peg Shopify's growth merchandise value to grow by 28% year over year and for revenues to increase by 37%. As a result, he upgraded his rating from a hold to a buy. He believes that given the 30% revenue growth in the bull case scenario, coupled with maintaining a premium valuation, should drive shares to outperform the overall market and the software as a service space. The second stock we're looking at is Wix.com, and its ticker is WIX. Wix.com is an Israeli software company, and it provides cloud-based web development services. It allows users to create HTML5 and mobile sites, which allow users to use the drag and drop tools. The current price for the Wix stock is $139.16. The analyst rating consensus is a moderate buy, and the analyst price target is $228.62. This is a 64.38% upside based on 13 Wall Street analysts offering 12-month price targets. The shares of Wix have dropped 4.4% in the past month and by a whopping 44.8% in the past year. This is even though the company delivered strong Q3 results that prompted Wix to raise its outlook for the year ended 2021. In fact, for the fiscal year of 2021, Wix.com has projected year-over-year revenue growth between 28 to 29%, with revenues ranging between $1.26 billion and $1.27 billion. But looking at their Q3 2021 results, they had a revenue of $321 million, which was up 26% year over year. And they had collections of $373 million, which was up 33% year over year. They also increased the number of businesses that rely on Wix as their full operating system. So their business solutions revenue and collections was up 55% year over year and 53% year over year respectively. In recent news, Wix partners with Nuvei Partners to process their payments. Nuvei Corporation is a global payment technology partner, and it partners with thriving brands, and it now has a partnership with Wix, which, as you know, is a global software-as-a-service platform. The integration will deliver fast, seamless, and secure payments processing for Wix merchants and their customers across all industries. Nuvei will essentially provide Wix with local acquiring and payment processing for their merchants, and this will help them deliver enhanced online shopping and digital payment experiences. Analysts expect that Wix.com will report full-year sales of $1.27 billion for the current fiscal year. They expect quarterly sales of $330.32 million. These are fantastic estimates that could ensure that Wix.com has stock price increases for investors. Wix.com has also been expanding its functionality for its users. It's launched App Builder branded app by Wix to create their own native mobile app. They've also introduced a platform for fitness professionals. This is called Wix Fit. This is a complete platform tailored to support personal trainers, gyms, and multi-location studios. The platform includes every touchpoint a fitness professional would need to keep up with the changing industry, boost productivity, and ultimately make clients feel their best. Earlier in 2021, Wix won Google Cloud's Expansion Partner of the Year award. They were recognized for the company's achievements in the Google Cloud ecosystem, which helps joint customers achieve better results through integrations of Google Cloud's platform and Google Workspaces within the Wix platform. Looking at the website traffic data available on the TipRanks database, it indicates that in the fourth quarter of last year, unique visitors to Wix.com slowed down with a drop of 6.4% year over year to 55.8 million. Many of the analysts deem it to be a buy, but some deem it to be a hold, such as Brad Erickson, who is an analyst from RBC Capital. So last year, the company had announced a partnership with Vistaprint where customers used Vistaprint for building brand and marketing strategies that could be used on the Wix platform. So Ericsson estimates that barring another Vistaprint type deal, collections could be approximately 4% below street estimates for 2022 and around 6% in Q1. This analyst is of the view that the company's payments and e-commerce narrative could support the stock for long-term investors, but the analyst continues to struggle with arguments around EV enterprise value over revenue-based valuation support. He thinks that lower growth rates will become the norm, replacing historically high levels of growth at Wix. So guys, what do you think of Wix.com and Shopify? Leave your thoughts in the comments below. We love to hear from you. And if you guys made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. And remember guys, this is not financial advice. Make sure you do your own research before you invest in anything. I'll see you guys in the next video. Bye!